Phil Strebel, we have an EU summit coming up later this week. So far, all these get-togethers have been fairly anticlimactic. Why should this one be any different?
Well, the only thing that I could say about this next one is that I think that Greece is really going to try and push the envelope, saying that they've made their own changes internally, and they're going to basically try and convince Germany to allow them to use some of these bailout funds to buy some of the sovereign debt and some of the riskier assets to try and stabilize their market. But I don't think that anything different or any significant move is going to occur as a result of this. You may see some more downside pressure on the euro currency, which will keep gold and euro terms nice and supported. But I don't see anything big coming out of the summit.
All right, so Greece tries to prove itself. What goes on with gold? Tell me your targets for gold.
Well, still your downside thresholds like that 1532, we might trickle back down to 1550 before we get a bounce. I still think we're going to work our way up back up to at least 1600. And then targets closer to the end of the year, I don't think we're going to get back up to like 1819 or 2000, but we may see, at least 1650 to 1700 probably have some kind of average price range around there. So I have been looking at like December 1650 call spreads for quite a while.
We have seen a few investment houses come out with very high price targets for gold lately. I think it was SocGen with a 6,000 recently. What do you make of these? Are these just analysts trying to make names for themselves, or is this an indicator that gold finally has a floor and is going higher?
No, what they think is they think that there is going to be serious, QE out of the United States and just global QE altogether. And I think they think that we'll end up in an inflationary environment as a result of it. And that's why, obviously gold's a great place to be if that occurs. The problem is that the U.S., it doesn't seem like we're going to embark on a QE unless we get serious deterioration, within the next month. Otherwise, they're going to wait as long as possible to get us past that next election. Over in Europe, they're also doing their own particular dance because they don't want to print too much money. They want to see if they can really bring things together, and then decide whether a QE is possible. So those houses are basically betting on a QE event and an aggressive one right away.